Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today. So today we're just going to go through what to expect within this week. We have a relatively busy week, and of course, we have a lot to look forward to. So to just look through to see what are the main things moving the markets. The markets are coming from a busy weekend where we had the French elections. So of course, from the French elections, we saw that there was a very big surprise with regards to the party that won the most seats in parliament. And of course, we had the party that won was the Far Right Alliance, which is a mix of the socialists and a new party, I think, which was formed recently in France. So again, it is almost, I would say, a bittersweet victory because we're expecting that the markets are happy that at least we did not get a win from the far right, which were the favorites for that election, but also a far right victory was also not going to be that much of impressive for the markets. Again, also looking towards to we also had some news coming in here regarding the Boeing. I'm sure most of you must be aware that Boeing has been going through a few issues, especially with what has been happening with its aircrafts. A number of its aircrafts have been having issues, and that has also taken a hit on its stock price. We've been seeing Boeing steadily in a decline on the back of issues with some of its aircrafts. All of this began, of course, with the MCAS system, which was having some faults. And tragically, of course, that affected some airlines. But we're also seeing that right now, Boeing is going to plead guilty in a US probe for the fatal 737 MAX crashes. I'm sure you all remember when these planes were grounded, and even after they were grounded and they were then released to operate, we're still seeing that there were some issues with these planes. Now, recently, we've also seen that the deliveries for planes to China also took a slump after China halted getting planes from Boeing on the back of concerns with certifications from the airline. Now, in addition to that, we've also seen some news coming in telling us that Boeing did not pass its pre-inspections by the FAA in the US. It only passed 60% of all its inspections, meaning that there are some concerns with that. This stock also is not doing that well. If you check on the Boeing stock, it's also taking a hit. And of course, at the moment, we are seeing that this news of criminal charges, criminal fraud, conspiracy charge by the US Department of Justice is likely going to take an impact on the stock. Now, aside from that, we also got some news on Friday indicating some analysts are also looking a bit bearish on Nvidia on concerns that its price is extremely inflated. And of course, I do not know whether that is going to affect the stock, but I don't think so. Now, crossing over to what we can expect this week. This week is a relatively busy week as we have the US CPI going to be released on Thursday. But in addition to that, we also have testimonies from Powell. These testimonies are essentially where the Fed chair will be in front of a committee in Congress, and of course, he will be talking about he will be making some comments on the monetary policy, and will most likely will get hints from Powell on when we can expect the rate cuts to happen. Now, looking at the NFP numbers that we got on Friday, we are seeing that the NFP numbers have indicated that there are signs of cooling in the labor market, which of course is indicating that the Federal Reserve will then soon act on cutting rates. Remember, we said that the only thing that is going to push the Fed to cut rates is going to be if they see signs of slowdown. They had not yet seen those signs as we're having a relatively hot labor market. But now looking at the numbers we got from NFP, the numbers came in steadily high, but we saw that the unemployment the number ticked up a little bit, indicating to us that there are signs of cooling and hiring. And of course, if you guys also remember from the very last NFP release we saw that despite the jobs number coming in higher, if you looked at the number a little bit further, you'd be able to see that actually the reason why the jobs number came in high was simply because people were taking part-time jobs, and that of course helped the number to push higher. Now, if we get a relatively weak number today, I think, I thought we had NFP. My bad. I think my mind is still in NFP. Anyway, if we get a weak CPI number, I think that is going to cement, the Fed to possibly lift off rate cuts in September, and of course, the markets are really showing us that kind of push towards an early rate cut. Right now, of course, the dot plot is showing that the committee members, 19 of them, are pushing towards a rate cut in December, but I think we are going to see that revised possibly to a rate cut in September. Now, aside from that, of course, we also had the UK election on Thursday. The UK election had a bit of a nice move for the pound. We saw the pound steadily moving higher on the back of, that nice switch from leadership, where we saw that Rishi Sunak resigned, and of course he handed over his seat to a gentleman called Strama. His other name is a bit confusing for me, and of course that came in as a good sign for the pound, that there's stability in leadership, and that uncertainty that definitely comes in from elections is not there at the moment. Now, I'm looking over at the DXY. So now, before I move over from here, I just want to speak briefly about the testimony. So that testimony by Powell is going to affect the market, but it's mostly going to affect indices, where we shall see that if we get some commentary from Powell on likely indications of when the rate cuts should come, then I think that is going to be bullish for indices like the Dow Jones and like the Nasdaq, and we could also possibly see a relatively weaker dollar going into Tuesday. Now, aside from Powell, we also have Janet Yellen, who will also be doing a testimony. She'll also be testifying. Yellen also might move the market as much, but I do not expect us to have that much of an impact from Yellen. Now, as most of you might or might not be aware, we're in a month of July, and July is a month when we shall see Q2, Q2 earnings. For Q2, Q1 is January to March. Q2 is April, May, June. Okay, so in July we are going to get earnings. So the earnings are going to start this month, and if you go on your calendar, for those of you that are trading stocks, my friends trading stocks, and for those of you that are trading indices, it's important to take note that we are going to be getting earnings very soon, and the earnings are starting as soon as this week. This week is earnings season, guys. So 12th of July is when we're going to get our first set of earnings, and we have the big banks posting earnings. We have JP Morgan, we have Wells Fargo and Company, we have Citigroup, we have Bank of NY Mellon, and of course on Monday, which is next week, on Monday 15th, we also have some earnings coming in from Goldman Sachs and BlackRock. So all these are going to be catalysts for the indices, and we should see big moves pushing into the trading day on Friday. Awesome. So let me see what we can go through. So I think aside from that, and of course, as you've seen in the snapshot topic, I think you're seeing there that we have record highs for a number of things. We have record highs for the Nasdaq, record highs for cash indices. All cash indices, I think, aside from the Dow Jones, are all registering record highs, and of course these record highs are likely possibly could indicate that we are looking fully bullish, and I don't think really we don't have that much of signs that maybe the markets could possibly cool from here. We should see more strength as we go into the rest of the week. Okay, so now let's cross over to the DXY. I need us to just see what you can expect from the DXY. Okay, so the DXY is typically looking like this at the moment. We are seeing a lot of weakness for the DXY. Now there are signs that we might have topped for the DXY. Of course, I remember the last time we went over the DXY, I told you guys that typically election years are normally bearish for this particular asset. And of course, if you go to 2020, you'll be able to see that in 2020 we had a very, very sharp sell for the DXY, where we saw it recording record lows around this level of 89. And of course, we've seen that the DXY has been holding that level nicely. And of course, it's now bought from there. Now, a repeat of 2020, I think aside from the pandemic, is 2024, where we shall have a showdown between, Donald Trump and possibly Joe Biden. That's if Joe Biden doesn't his seat doesn't get given someone else. But at the moment, we have a showdown between Joe Biden. There's a likelihood that Kamala Harris is going to, who is the current VP, might run for Democrats, but we're not yet so certain of how that's going to happen. But there's some signs of weakness on the DXY, and this of course is likely because we are seeing some cooling that is happening with the data we have seen. GDP again was in the region of 3 to 4%. It reduced in Q1 to about 1.3%. We are seeing the NFP numbers also showing signs of cooling. The unemployment rate ticked up higher. And in addition to that, we have also seen that the CPI has also been cooling quite strongly. So if the CPI comes in weak this Thursday, I think that is going to cement downside for the DXY, where we should possibly see it coming back to test its lows that it got around this area here. And of course, this is likely if we get a weak reading for our CPI on Thursday. So there seems to be a top at the moment for the DXY, where it has failed, first of all, to take out its highs it got in May. And of course, it has also failed to take out its high it made around the beginning of June last month. So at the moment, we are seeing steady weakness there that could allow further losses for this particular asset. Now, before I cross over to MT5, okay. Before I Malombe, the bias for euro dollar, I think aside from the uncertainty that we're having with the French elections, would be a buy bias since our lows are already in. Euro USD is trading above its 200-day moving average, which is a sign that there's a longer term. There's chances of a higher upside in the long term, and of course we have to wait to see how that plays out. But at the moment, we have a buy bias for it now. Looking at gold, I just want to look at gold here from trading view. So gold is looking like this at the moment. We saw gold having very, very strong momentum on Friday after the okay. First of all, we saw a very, very sharp liquidity sweep. For those of you that maybe haven't made sense of gold's price action, gold had orders it had to take out around here. There was a very, very big bullish order block for gold around this area here of 2,349, 2,360. That's the reason why gold failed to sell below this area. Okay. It failed to sell below this area because of that order block, bullish order block seated there that is holding gold around these levels. So on one hand, we had a relatively bullish NFP result, but the fact that we had this very sharp sell into this area here and buy above should have pointed traders to look for buys on gold. And at the moment, we are seeing gold selling into this zone, possibly for it now to come, and retrace from that area that we saw on Friday. But the bullish momentum is still strong. And if we get a weak NFP reading this week, gold is going to trade above 2,400 for the first time, I think, since when? Since I think May. That's it's likely to happen for gold. Okay. For now, let's just cross over to the MT5 and see what you can expect over there. So for the MT5, I'm going to start with GBPUSD. So for GBPUSD, this is what we're having with it. At the moment, GBPUSD is showing signs of strong upside momentum, and of course, the reason for this is first of all, we have a certainty with regards to politics. We're not getting a lot of impact from the UK election. Peaceful change of leadership. We saw Rishi Sunak. Rishi Sunak gave up his seat. He resigned. There wasn't there wasn't any tensions with regards to the handover of leadership. The other thing, of course, is that the market seems to be happy with the current leadership that has come in for the UK. That's the reason why we are seeing that the pound is holding up quite nicely. Looking at things technically, this is where we can expect the pound to go. The pound has now made a sharp recovery all the way back to where it was, where it had a very, very sharp barrier around this level here. If you recall very well, around this level here was when we had the CPI. So the markets are quite interesting because CPI last month was on the 12th. CPI this week is on the what day is it? It's supposed to be on a Thursday. Let me just check when Thursday is. Thursday is 11th. So the pound is now trading where it was last CPI, which is quite odd because if the CPI comes in lower, I suspect the pound is going to make a sharp recovery back to where it was in March. Okay, so now we shouldn't be looking at near levels now. We should ideally be looking for higher levels for the pound. So possibly anywhere above these areas here, 1.28513, possibly 1.28, 900 is where the pound is headed for. I'm expecting that we're going to have a cooling in inflation this month. If the inflation comes in higher, then that could possibly warrant us to see a weaker pound. But at the moment, I think the pound is going to move higher. Now, for those of you that are interested in nice trading opportunities for this month, I want to push you to something interesting. For those of you that trade the Dow Jones is giving a very, very nice potential for a high risk reward, okay? Rather a high reward on risk, okay? If you look at where the Dow Jones is seated at the moment, we are going into earnings for the big banks. The earnings are going to be on Friday, okay? Typically, what I've observed with the Dow Jones, now, why I'm mentioning this is that I know we're all here for trading opportunities. So, if you want good trading opportunities for this week, the Dow Jones is going to be your best bet. You know why? They are going to be earnings on Friday. If we get strong earnings from those banks, the Dow Jones it has a lot of room to rally. If you look at S&P 500, the Nasdaq, all of them are right now at record highs. Dow Jones is not yet at record highs. Its record high is from where it's at the moment. We are seeing a push higher of about 2.4%. Okay, so if you are to look for potential buys at the break of our barrier, which we had around this level here, we should be looking for the Dow Jones to rally all the way up to 40,000. So the reward this week on a Dow Jones is very, very nice. If you're looking for buys here into Friday, we should see the Dow Jones possibly moving to its highs around 40,200. Now, let's cross over to the Nasdaq. The Nasdaq is currently trading at record highs, and it's really, really tricky for us to read and see where it's likely to go. Now, at the moment, as we discussed last week, the reason why the Nasdaq could possibly test higher levels is because some of its big components like Tesla are now starting to wake up. The stocks that pushed the Nasdaq previously higher to this level, okay, this level right here was Nvidia and Apple. Okay, we had Apple, releasing its Apple Intelligence, indicating that it's going to partner with OpenAI. We had Nvidia also coming in saying that they are going to possibly partner with Apple. All that pushed, that index to this level. Then, of course, we saw a nice sell on supply coming in from that area back into this demand zone here. But now we are seeing the rally that is currently happening on Nasdaq at the moment is because of Tesla. Okay, Tesla is the component that is actually helping the Nasdaq to rally. and also what has enabled it to break to this level here. Tesla at the moment is trading below its 52-week high, okay, which is indicating that in terms of upside, it has a lot of potential. If we see Tesla possibly continuing to post between 2 to 3% gains on every other trading day, that is going to allow the Nasdaq to record even higher levels, upwards of 21,000. Okay. Again, if the top stocks like Nvidia and Apple also hold on to their current highs, that would then allow this index to move higher. But at the moment, we are looking at strong bullish momentum. The market is extremely bullish. We're in a bull market, and we could potentially see us, reaching these higher levels. Now, trading pullbacks, I think we should look for pullbacks towards these areas here. Again, the market does not move in a straight line, so there are going to be pullbacks happening. We should then see potentially some pullbacks into this zone where I think we might have demand seated, or we should have some order blocks along this level. If we take out this zone, then I think the Nasdaq could possibly, pull back towards the 50-day average there, which of course is where traders should have their limit orders in case the market were to pull back to possibly move back higher. That's in case we see a bearish scenario. But guys, this index is looking really, really bullish, and it could stay that way as we proceed into the week. Now, crossing over to Euro USD. Euro USD, first of all, held its confluence support around 1.06482. And I think if you guys have been joining me for the snapshots, we've been spot on with Euro USD. We've traded it quite nicely. We saw it holding this level very nicely along 1.06482 for a potential move to the upside. Again, we had a very nice shift of structure here where we saw the market steadily breaking through this level, crossing above its 200-day moving average, and of course now moving higher and higher. And of course, the other thing is that we are now also above our death cross that we had on the H4 time frame. So I need to remove this, indicating to us that then we should see, this particular pair possibly starting to move higher and higher. Now, there were some indications that we could get some tensions in France. But of course, the riots are not too many. The tensions are not really that much of a problem, which should then support the euro to the upside. If we see a weak CPI reading this week, that is going to cement upside momentum for the euro, and we should see the euro recovering very nicely towards this level here. And of course, if we get a break of level there or structure there, the euro has a lot of levels to get to. We have all these levels to get to, guys. We have this area here, which of course we need to break. And of course, if we break that level, the buyers are going to come in and they will take the euro all the way up to these levels of supply here. So at the moment, I'm looking relatively bullish on the euro, expecting us to move all the way to those levels. Yeah, Mr. Robert Cavale, you're saying you're late. No worries. You will be able to catch a recording of the snapshot once through. Now, let's look at gold. Now, I know that I covered gold on TradingView, but I know that maybe some of you that maybe joined the snapshot a little late, I can still go over it for you. Now, first of all, to start it off, gold is in a technical uptrend, as you can see. We had a golden cross on the H4 time frame along that level of 2,331. We were essentially looking at using limit orders on gold within that box. Okay, we had a lot of limit orders we were able to set within that box. If you if you are able to see that we had gold, selling, gold was selling from this area around here of 2,334, and it was holding support along this level here. We also saw there were quite a number of liquidity sweeps for gold along this area here, and of course it is within this area of consolidation that we had the golden cross appearing, which was a sign that gold was going to launch a very nice rally. We saw gold breaking out of this box here very nicely, and of course after breaking above that box, we also then saw it taking out all these levels here, and of course soon after it broke these levels here, we saw a very sharp move higher for gold. Now, For the the NFP reading surprised a lot of traders because most of them thought that actually gold was a sell, but you can see that the technical bias for gold from NFP was a buy. So going into NFP, I think we should have been buying gold and not selling it. That is why when we got this week, we saw that there was an order block there, which held gold above there and stopped it from taking further losses to the downside. So soon after we saw that order block, we saw gold buying back up. And by close on Friday, gold was able to clinch these highs here of 2,392. At the moment, gold is having a bit of it's having a retracement, which of course is normal from this level here. What I would do is that I would then look at having my Fibonacci retracement. I would just add it like this, okay, to see where the technical pullbacks are possible for gold. Gold should have a pullback into this area here, possibly towards 2,371, possibly 2,368 are the possible levels, where again, it's likely that clients should set their buy limits. In case we have the buy limits triggered, then we should be looking for gold to aim for a trade possibly back to this level during the New York session. Looking at how silver is doing at the moment, because silver will give us an indication of where we can expect gold to move. Silver is currently trading lower today during the Euro session. It's currently down about 0.7%, but it's not looking bearish. So then I do not expect gold to have too much selling. If you have your limit orders possibly set somewhere along here, then you should be looking for a potential retracement along that level, and then for you to have possibly gold testing them and then moving higher. Again, if gold fails to to have a move back higher, I think it will then be aiming for that order block that we had last week. And of course, we might have gold possibly selling further into this area here towards a 50% retracement around 2,364. And of course, if it tests that area, then we should have it moving higher. Now, again, on Thursday, we have the CPI. And of course, for the CPI, the approach is that we shall either see gold having a sharp sell on higher CPI, and of course gold having a sharp buy on lower CPI. Yeah, but this move higher that gold has launched, I do not think is going to lose momentum at the moment. Gold wants to test higher levels, so possibly within or later within the week, we are going to see gold crossing above 2,300 and 2,400 and possibly trading higher to those levels above there. Awesome. I think really that's it for what to look out for today and also possibly into the week. Several other assets, of course, are looking relatively bullish. USD JPY, consistently breaking record highs. On the back of that carry trade for the JPY pairs, we are seeing that the JPY is really, really weak. The Bank of Japan cannot hike rates, otherwise they will pay high. Their debt will get expensive, so they are keeping the rates low at the moment, and they just have to. What they are paying for that is a weak currency. So, yeah, we're going to continuously going to continue see higher levels for GBP JPY. I think the snapshot team, I think, has been bullish on GBP JPY for now for a number of months. And of course, I think, if you're trading GBP JPY, you need to use buy limit orders, look for a potential retracement, and of course, buy after those retracements. By the moment, GBP JPY is still looking very, very strong bullish. Awesome. That's it for me. And okay, Malombe, you want me to check the small cap. So the small cap, Presto 2000, has not been trading like its counterparts. And of course, a lot of traders have been looking towards for of course, those who are not able to get, we're not able to get the other indices at lows. Everyone is now switching to the small cap to see whether they could now make up for that late entry on the small cap. So FX Pesa has the small cap. We just have to look for it from here. So we have the Russell 2000, which is the cash indexes, the cash CFDs. So it is RUS 2000. So I just have to look for it from here. I don't have RUS 2000 open. Yeah, so this is how the small cap is looking like, Malombe. The small cap, of course, has a lot of of nice potential moves higher. If you look at it on the daily, you can see that small cap is not at record highs. It's not yet in a bull market. It's not yet in a bull market. For it to get into a bull market, we need to take out this high that we had sometime around first of wait, just have to make sure that we are in I need to get the highest point possible. Okay, actually we are actually currently in somewhat of a bull market. We are just oscillating around there. We're not yet in a very strong bull market. If we do, we need to stay above our record highs, previous highs, which is around 2005. If we stay above it, then of course we should see a nice move to the upside. Now I'm looking at the Russell 2000. Again, the small caps are not performing like the big caps, like the mega caps. If you look at S&P 500, again, the Dow Jones, all those are looking strong bullish. Dow Jones is above its record high, which it had in 2022 of 36,900. Now trading at 39,400. So it's up more than 2,000 points above that area there. And I think the same also we should see small caps pushing higher. But the momentum for upside is somewhat not really too much for the small cap. I think the small caps really, we have not yet seen that nice momentum for them to buy. But looking at the price action now, Malombe, I would be looking for buys below my 50-day moving average. Again, I would also be looking for even bigger risky buys, possibly below my 200-day moving average, for a potential move above it and possibly towards that high of 2,138. Awesome. Yeah, so of course the petrodollar agreement came to an end. We all know that. But of course the impact, guys, I've had a lot of these questions from clients. I just want to just be clear, guys. The currency which is used for global trade is the US dollar. Okay. The US dollar is what is used for global trade. I know that there are some implications possibly for a weaker dollar on the back of the end of that petrodollar agreement, but currently over 80% of global trade is conducted in the US dollar because of the strength of the US economy. It's the biggest in the world, strength of the currency, world reserve currency, so all these factors play a part. Again, the impact needs to be extremely it takes a lot for it to impact the US economy. I know that's why the petrodollar agreement ended and we have not yet seen a really big hit on a dollar because of those factors. Okay, awesome. So I hope that helps. Great. Gold versus USD. I think I've covered gold already. There's going to be some hesitation for gold to sell along this area here, which I've marked. If we continue to sell, we are going to be aiming for that order block which we had from NFP. Again, gold is bullish. It wants to just come and clear all those orders. It had to sell a bit, pull back again from those highs. If it's going to pull back a bit, hold its price action along those levels, then it's going to resume its uptrend. Yeah, awesome. That's it from me, guys. I wish you all happy trading. Thank you so much, guys, for joining me for the snapshot. And of course, we should just keep an eye on the markets and see what happens. Awesome. Briefly, for those of you that are still on, I just want to talk about the Kampala takeover. For those of you that are joining us from Kampala, we have a very packed week, an interesting week for you guys on the week of 15th, starting from the 17th. We are going to be having a live trading event on the 17th at the FX Pesa office, which is located at Rumi Building, 7th floor along Lumumba Avenue. Then we also have another live trading event on the Friday, the 19th. And of course, we are going to be having a team from Kenya, which is Rufus Kamau and Robert Mbogo. And then on 20th, we are going to be having a Pips and Branch. So don't miss out on all those events. I'm sure you'd really want to be a part of those events, guys. I wish you all the best and look forward to seeing you guys in attendance. Cheers, guys, and happy trading.